Hi there. In this video, we will have a discussion on para 15 of IFRS 15. What a coincidence. The para 15 is applicable only in case of a revenue that does not qualify or does not met with the criteria mentioned in the first instance, in the first step, that is the identify the contract with the customer. So there may be a contract with the customer because there are five conditions attached in the first step itself. So there may be cases that a particular revenue transactions may qualify all the four conditions but may not be able to qualify the fifth definition or fifth conditions. For example, if we have entered into a contract with A Limited to provide some services, and we are suppose B Limited, it need to provide some services, and in consideration they will pay some dollars, some cash. What may happen is there may be events that we may not be able to collect money from A Limited because of some economic downtrend or any kind of a, internal event that may happen, which may going to affect the collectability, which may going to affect the collectability from A Limited, and this hits the fourth condition, that is there has to be a probability of collection of the expected revenue. So which means that it may not fall under the first criteria, or it may not meet the first criteria itself. Then in such a case, what may we need to do, that we need to follow paragraph 15. So paragraph 15 says there are two conditions. Suppose paragraph 15 is applicable to a particular transaction. It says that if all the performance obligations are satisfied plus substantially all the amounts that are receivable has been received, then we will book the amount as revenue, or the contract is terminated. It is terminated, and it is a non-refundable deposit. If any of the contract or any of the transaction falls within IFRS 15, and it covers under para 15 because we are not able to pass through the first condition or the first step itself, then in such a case we will book the amount received from the customer as revenue only and only if any of condition 1 or condition 2 is satisfied. In respect of the condition 1, if the entity has provided all the performance obligations to the customer plus substantially all the amounts of revenue or all the amounts that are receivable from the client in respect of the particular performance obligation has been received, then in such a case we can book it as a revenue, or the contract is terminated and it's a non-refundable deposit. If any of the following conditions satisfied, we may book the amount received as a revenue. And one more thing just I want to throw some light on is that if you have received any such amount, that amount should be treated as a liability rather than a revenue, because that's why we are having a discussion on paragraph 15, right? So any amount that you have received, you need to book it as a liability, and when the conditions under paragraph 15 are met, then this liability will turn to revenue. And one more thing, there may be situations that the credit quality of A Limited has got improved and they may be able to pay the amount, the probable amount. Then in such a case, the contract will fall under the revenue transaction. Sorry, the revenue from contract with the customer and the contract with the customer. Then in such a case, paragraph 15 get revoked in its own, because it is meeting the definition of identify contract with the customers. So we don't need to apply IFRS, paragraph 15 on that instance. So let's go through the slides that I have prepared on this regard. Let's run through the slides that I prepared for paragraph 15 on IFRS 15. Again, what a coincidence. The first thing, when a contract with a customer does not meet the criteria in paragraph 9. So paragraph 9 is basically we talk about the first step, that is identify the contract with the customer. An entity receives consideration from the customer and shall recognize the consideration received as revenue only when either of the following events has occurred. Either means it's an or. If this condition is satisfied or this condition is satisfied, any of the conditions satisfied, then we can book the amount received as revenue. The entity has no remaining obligation to transfer goods and services to the customer, and substantially all of the consideration promised by the customer has been received by the entity and is non-refundable. So that was the first condition. You have delivered all the promised goods and services and you have received the substantial amount of cash. You can book the amount received as revenue. Or the second condition is the contract is being terminated and the consideration received is non-refundable from the customers. So any of the conditions satisfied, the amount received has to be booked as revenue. The third aspect it is regarding the consideration received. An entity shall recognize the consideration received from a customer as a liability. It's like bank account debit to customer advances as per IFRS 15, 100,000, 100,000 as per this paragraph. And until one of the events, that's two events that we have discussed, occurred, or paragraph 9 are subsequently met, which means we talked about customer collectability. If the collectability criteria is satisfied, then depending on the fact that the liability recognized will will be treated as revenue. We need to reverse it and the customer advance will be debited and we need to book a revenue correspondingly if the conditions are satisfied. On the top of that, the liability shall be measured at the amount of consideration received from the customer. So it has to be recognized at the amount received, which is common sense. So if we have understood what we can do in respect of any contract that does not meet the definition of IFRS 15 per se.